Welcome back to the deep dive. Today we're trying to navigate the pretty tricky waters of crypto regulation.
Yeah, and specifically what it might mean for digital money, how we might actually use it day to day, especially here in Europe.
It's definitely a space where things change fast.
Absolutely. And to really get a handle on it, you kind of need to look at it from different angles. You've got central banks, you've got the companies actually building this stuff, very different viewpoints.
Right. And for this deep dive, we're mostly leaning on some pretty key insights from Fabio Panetta. He's the governor of the Bank of Italy, based on their recent annual report.
But we're not just looking at that, we're layering in other perspectives too, right? Like the ECB and crucially the stablecoin issuers themselves. Think Tether.
Exactly.
Yeah.
So our mission really is to unpack all this. We want to understand, what tools these different players think we need to manage the risks as crypto gets bigger.
And importantly, what does this all suggest for the future of payments? The kind of digital payments you might actually be using soon.
Okay, so let's jump in. Panetta, coming from that central bank world, he has a pretty clear take.
Mm-hmm.
His main point seems to be that a digital euro isn't just a nice to have, it's like essential. Maybe even more fundamental than the big regulation we already have, MiCA.
Yeah, that's fascinating. He's basically saying, look, rules like MiCA are necessary, sure, but they're not the whole solution.
Mm-hmm.
He seems to think those rules might not fully get at the sort of systemic risks that could pop up as crypto grows. So the digital euro, he sees it as like a foundational piece. It complements the rules.
It's not just an either.
Exactly. It works alongside them.
Okay, but he didn't just talk theory, did he? His report actually looked at MiCA's impact since it, properly kicked in. What did they actually observe about stablecoins issued in the EU?
Well, the report was pretty blunt, actually. It said MiCA has had, and I quote, a limited impact so far.
Limited impact. On what specifically?
On getting MiCA-compliant stablecoins, the ones often called EMTs or electronic money tokens, actually issued within the EU. He pointed out only a few have popped up, and, well, nobody's really using them much yet.
Huh. Limited impact feels, well, a bit surprising, doesn't it? Given MiCA was supposed to be this comprehensive framework.
Yeah.
Did he say why? Maybe looking at Italy specifically?
He did. He mentioned little interest in Italy from what he called supervised financial intermediaries.
So the banks, the payment firms, the ones already regulated.
Right. Little interest from them in actually issuing these new crypto assets. He said, yeah, MiCA has got them thinking the reporting plans may be applying to handle crypto like custody or trading,
Okay.
but actually creating new EU-based stablecoins under MiCA seems much quieter than maybe some people expected.
So MiCA gets the paperwork moving, but not necessarily this big wave of homegrown compliant stablecoins.
Interesting.
Interesting. And if that's the case, if the uptake inside Europe is slow, where does that leave people who do want to use stablecoins?
Well, that leads straight into another big concern Panetta raised, the risks coming from outside the EU, from platforms and issuers based elsewhere.
Okay.
He argued that while MiCA gives EU citizens some protection, it can't fully shield them because, well, regulations aren't the same everywhere. That heterogeneity he talked about.
Right, the patchwork of different rules globally.
Exactly. So, an EU user could still get caught out if some foreign platform fails or a non-EU stablecoin collapses because maybe their home country's rules weren't as tight.
Lacking controls
Transparency.
or operational safeguards, yeah,
Mhm.
all that stuff, which is why he was really pushing for more international cooperation, saying the EU should kind of lead the charge on setting more consistent global standards.
Okay, so if MiCA isn't sparking massive EU issuance yet, and that potentially pushes users to platforms outside the EU with maybe different risk levels, that brings us back to his main point about the digital euro being the answer.
Precisely. He was really firm on this. He literally said the digital euro is the right tool. Full stop.
Right tool? Yeah. He believes only a central bank-backed digital euro can provide that fundamental trust and core functionality needed for the digital future we're heading towards.
And he sees it as keeping pace with technology.
Absolutely. It's framed as the necessary response to the ongoing technological transformation. The thinking is it meets that growing demand for digital payments that are safe, efficient, easy to use everywhere. But crucially, it keeps central bank money right at the heart of the system, playing that anchor role it always has. He said the whole digital euro project basically comes from that specific need.
That definitely sounds familiar. It lines up with things we've heard from others, like Piero Cipollone at the ECB, right?
Oh, absolutely. It's very much in sync with the thinking from Cipollone. He's also been a big voice pushing the digital euro forward.
Right.
And Cipollone often points to, the sheer dominance of US dollar stablecoins. What is it, like 97% of the market?
Yeah.
He uses that as a key reason why Europe needs to get its own CBDC act together, and fast.
Yeah, you can see the logic from a central bank perspective. If private digital money is exploding, and almost all of it is in dollars, potentially under different rules, you'd want your own digital currency to maintain stability, maybe even monetary sovereignty.
Definitely. But, and this is where it gets really interesting, you get a completely different story from some of those big private stablecoin issuers, like Tether.
Okay,
Yeah.
Let's pivot there. Tether, issuer of USDT, the biggest stablecoin. They looked at MiCA's rules for stablecoins and basically said, nope, not for us. We're not registering USDT in Europe under MiCA. That's a huge statement.
Hey.
Why?
Well, Paulo Arduino, Tether's CEO, he was quite forceful about it. He said the MiCA license is very dangerous when it comes to stablecoins.
Wow, dangerous.
Yeah. And he even added he thinks it's even more dangerous for the small, medium banking system in Europe. Now, unpacking your argument based on public statements, it often seems to circle back to things like MiCA's specific capital requirements for issuers. They seem to view those as maybe too heavy, potentially restrictive, maybe stifling innovation, or just making their business model harder compared to how traditional money moves.
Very dangerous.
Wow.
That's some serious pushback. So you've got the Bank of Italy governor saying MiCA isn't quite enough, maybe needs the digital euro alongside it, and it's not driving enough EU issuance yet.
Right.
And then you have a massive private player saying MiCA itself is the problem, maybe even harmful to them and the wider banking system. That's quite a gap in perspectives.
It really throws that core tension into sharp relief, doesn't it?
Yeah.
And have central bankers like Panetta, like Cipollone, their main job is looking at the big picture. Financial stability, managing systemic risk, making sure central bank money stays central. Then you have private issuers like Tether who are, focused on innovation, meeting market demand super quickly, running businesses that need flexibility. So naturally, what one group sees as necessary regulation, the other might see as dangerous or overly restrictive. Their mandates are just different.
Okay, so let's try and wrap this up for everyone listening. We've heard Fabio Panetta from the Bank of Italy making a strong case that the digital euro isn't just an add-on, it's a vital tool, maybe even more vital than MiCA, for managing crypto risks and meeting demand for safe digital payments.
Yeah, and his report suggests MiCA's impact on EU stablecoin issuance has been pretty limited so far. Plus, he flagged ongoing worries about risks from, foreign platforms because rules differ so much globally.
And then, bang, the complete opposite view from a huge private player like Tether. Their CEO calling MiCA's stablecoin rules potentially very dangerous, not just for them, but maybe even for European banks.
Right. And that core tension we've been talking about is crystal clear. It's this massive challenge of regulating a global, fast-moving tech like crypto using mostly regional rules. And alongside that, this strong push from central banks for their own digital currency, the digital euro, as a way to sort of manage the risks and offer a trusted, stable alternative as payments go digital.
So given these really quite different views on what's needed, more rules, a state-backed currency, maybe less restrictive rules for private companies, here's a final thought for you to chew on. When you weigh up the drive for innovation from private digital money against the stability potentially offered by central bank money, how do you think that balance will actually shake out in the coming years? Where do you see it landing?